Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now is a deciding moment for Bitcoin, and we also have some massive news for Ethereum about the Ethereum merge, which I'll be talking about later in the video. Make sure you watch to the end. First of all, just taking a look at what the US stock market did today. This right here is the Nasdaq 100 index on the daily time frame, and today was another bullish day in the stock market, but we're still testing this important golden pocket level of resistance. So as of right now, we have not yet confirmed a break above this important level, but if we do eventually confirm a breakout, then obviously that would be a signal to flip much more bullish again, because if you watched my last video on the channel, you know that we saw something similar to this back in around March, April this year, where during that time, that was where the golden pocket was sitting at, and because we did not break above the golden pockets, and because other factors like CPI inflation continued to get worse, we ended up seeing another leg to the downside. But this time could be different if CPI inflation continues to drop, and if we see a confirmed break above the golden pocket, which right now is yet to be seen once again, but we're getting close. And if you're new to this channel and you want to know more about all of this, then check out my last 1 to 2 videos on this channel, because in those recent videos, I went into more detail about the stock market and also inflation and the Fed. But anyway, getting into the Bitcoin part of this video, this right here is the 3-day Bitcoin chart. And if you're looking at the 3-day Bitcoin RSI, right now we're currently testing this downward sloping line of resistance where we've previously seen 3 rejections from so far in this cycle. And if you're looking at these 3 previous rejections, the first one was towards the end of 2020, entering into early 2021. And obviously that occurred in the middle of this much larger uptrend in the Bitcoin price on the 3-day time frame, but we still saw a massive pullback that lasted over around 1 month before we continued higher later on. But then if you're looking at the 2 most recent rejections, the one that we saw towards the end of October entering into early November, obviously that turned out to be a reversal signal on the larger time frames. And the most recent confirmed rejection was towards the end of March entering into early April, which basically sent the price of Bitcoin on another leg to the downside. So if we see another rejection from this downward sloping line of resistance in the 3-day Bitcoin RSI, then obviously going off previous examples, this is not good news for Bitcoin. But considering we're still in this test phase, we haven't actually confirmed a rejection as of right now. Of course, there's still a possibility that we could actually see a breakout this time round. And if you're wondering what a breakout in the 3-day Bitcoin RSI right here would mean for Bitcoin, looking at these previous examples on the chart at these previous bear market cycles, when we were seeing rejections from this downward sloping line of resistance in the 3-day Bitcoin RSI, obviously that turned out to be bearish signals. But when the time eventually came where we saw a breakout in the 3-day Bitcoin RSI above this downward sloping line of resistance, that turned out to be a larger bullish reversal signal for the price of Bitcoin. If you're looking at that first example back at the end of the 2018 bear markets, when the 3-day Bitcoin RSI broke out of this massive downward sloping line of resistance, that was essentially confirmation that the bear market had bottomed out. And if you're looking at the same breakout signal in the 3-day Bitcoin RSI during the middle of 2020, that was also a bullish confirmation signal, which was telling us that the market has already reached a bottom, and after all of that bearish price action, we're due to see a lot more bullish price action on some larger timeframes. But I want to make it clear that obviously because this is on the 3-day time frame, this is looking at the much larger moves in the market that last over many months and sometimes multiple years. So even if we see a confirmed breakout above this downward sloping line of resistance in the 3-day Bitcoin RSI, this is not a short-term signal, meaning that it is still possible we could experience short-term bearish price action. But in the case of a breakout in this indicator, obviously that would be a longer-term bullish signal for the larger moves in the market. But as of right now, we're still in this test phase where we haven't actually confirmed a breakout or a rejection. So right now is just a time to wait and see what happens next, and I'll be sure to keep you updated on this chart. And now if we zoom into the daily time frame, what we can see here is something similar, but on the daily chart, we're already starting to see the daily Bitcoin RSI poke above this level of resistance. But as of right now, this breakout hasn't yet been confirmed with a daily candle close. So if we see a daily candle close with the daily Bitcoin RSI above around 62 in the RSI, then that would be the first confirmation of a breakout in the daily Bitcoin RSI above this short-term level of resistance. And that would mean that the bullish scenario could potentially be playing out, which means that before we start to see another another pullback, we could still have some more room to run to the upside between now and the next pullback. And we also need to keep an eye on this ascending line of resistance in the Bitcoin price, which is coming into play at around 24.6k approximately. And once again, if we see a confirmed breakout above that level, then that would be the bullish scenario playing out. And in that potential bullish scenario, if we do confirm a breakout to the upside, as I just said, then immediately, if you're looking at the Fibonacci retracement tool, I'll be looking towards the 38.2% Fibonacci level of resistance, which is sitting at around 25.8k. And if we break above that level, then I'll be looking towards the 50% level, which is also coming in confluence with this previous level of support, which should now be acting as resistance, and that is coming into play at around 29,000. And anything above that, I'll be looking towards the golden pocket as a strong level of resistance, which is sitting at around 32,500 approximately. So those are the main levels to the upside. As for resistance, if we first confirm a breakout to the upside above that initial level of resistance that I just mentioned. And while we're on the daily Bitcoin chart, taking a look at the Bollinger Bands, which are still relatively squeezed at the moment, which technically means we're due to see a fairly significant volatile move in the price of Bitcoin coming within the next 1 to 2 weeks. Because if you simply look at the last couple times where we saw a squeeze in the Bollinger Bands indicator, and it goes a lot further back than just this time frame. But using these previous squeezes in this indicator as an example, we can see that these happen just before an extremely volatile move in the price of Bitcoin. And just by going off these examples on the chart right here, the volatile moves we're talking about are around 33% to the downside in that first example, around 40% to the downside in that second example, and around 30% to the upside in that third example. So basically, a move in the Bitcoin price that is roughly around 30% could be coming within the next 1 to 2 weeks based on this indicator alone. And unfortunately, this indicator alone does not tell us whether that volatile move will be to the upside or to the downside. So for that, we need to watch our levels of resistance once again, because obviously if we confirm a break above significant resistance, then it's more likely the volatile move could be to the upside. But if we confirm a break below significant support, then in that case, it would be more likely that we would confirm a volatile move to the downside like these previous examples. But like I said just earlier, we're still waiting for a little bit more confirmation for the direction of this volatile move. And if you zoom into the much shorter term, taking a look at this 4-hour Bitcoin chart, technically speaking, we do have a bearish divergence here because we have lower highs in the RSI, but higher highs in the price action. And over the past 1 day or so, we have seen this short-term bearish divergence play out. But technically speaking, as of right now, this hasn't fully been invalidated because we're still technically seeing lower highs in the RSI. But of course, if this most recent high breaks above these previous highs while the price also makes a higher high, then that would simply invalidate this short-term bearish divergence. And if you're looking at the 4-hour Bitcoin MACD, this is still showing lack in momentum both to the upside and to the downside, because just an example of a lot of bullish momentum in the short term would be like what we saw towards the end of July, where we saw a bullish cross in the 4-hour Bitcoin MACD, and then we saw a lot of bullish momentum if you're looking at the histogram, and that resulted in a strong bullish move in the price of Bitcoin. And in an example where we saw more bearish momentum in the short term, that would be like what we saw around the 20th to 21st of July, because we saw a bearish crossover in the 4-hour Bitcoin MACD, and if you're looking at the histogram, this stayed red for quite some time, showing that the bears in the short term are maintaining their strength. But in contrast to that, if you're looking at the MACD over the past few days, we've seen quite a lot of short-lived bullish and bearish crosses in the 4-hour Bitcoin MACD, with almost no momentum if you're looking at the histogram. The histogram has been very flat, which is normally a signal telling us that we're most likely due for somewhat choppy sideways price action rather than overly bullish or overly bearish price action in the immediate short term, just the 4-hour Bitcoin chart once again. And as for support and resistance levels in the immediate short term, I'm still looking at this range of resistance, which is sitting at around 24.6 to 24.7k if you're looking at the top side of this resistance. And as of right now, at the time of recording this video, the price of Bitcoin is currently sitting in this short-term range of resistance where we have previously found rejections. And as for short-term support, first of all, I'll be looking towards the 5-day simple moving average, which has recently acted as some short-term support, and that is coming into play at around 23.8k. And below that, we have more significant support in the short term for Bitcoin down towards around 22,500. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum chart, and right now we are finally seeing the invalidation of this bearish divergence on the daily time frame. Because obviously, if you're looking at the Ethereum price, we're still forming higher highs, but if you're looking at the daily Ethereum RSI, this is also forming a higher high, which means it's no longer diverging with the price. So obviously the invalidation of this bearish divergence is good news for the price of Ethereum. But with that being said, we also need to be aware of the fact that on the daily Ethereum RSI, this is currently entering into overbought territories, which despite having this bearish divergence invalidated, this does mean that things are still getting a little bit overheated at the moment on the daily time frame. And when it comes to possible price targets for this bullish movement, I'll be looking towards the golden pocket level of resistance, which is sitting at around 2.1k to 2.2k. And simply based on Ethereum's current momentum, it would be very realistic to assume that we could see those prices within around a week or potentially a few days based on the more recent momentum, and especially because Ethereum has had enough momentum to actually invalidate a major bearish divergence here. But with that being said, the golden pocket is still a significant level of resistance that we need to be aware of, because if you're looking at the Fibonacci retracement tool from the all-time high down to the next major swing low on the daily time frame, which was back in January, obviously we saw a lot of bullish price action throughout the first quarter of this year, which if you were watching my videos around 1 to 2 months ago down here at around $1,000 per Ethereum, I was constantly calling in my videos back then for a move in the price of Ethereum similar to what we saw in the first quarter of this year. And obviously since making those videos around 1 to 2 months ago, we've obviously seen this play out. In fact, this, if anything, is even more bullish than what we saw in the first quarter of this year. But back then, specifically towards the end of March entering into early April, we saw the price of Ethereum run into the golden pocket level of resistance at that time, which was sitting at around 3.6k approximately. And even though the price of Ethereum leading up to that moment was extremely bullish for around one entire month, we still experienced a lot of resistance around the golden pocket, and due to the fact that we could not break above the golden pocket, we saw a major rejection and another leg to the downside. So just redrawing this Fibonacci retracement tool from swing high to swing low, this is why I'd be looking towards around 2.1k to 2.2k as some strong resistance, and it is very important for Ethereum to eventually break above that level in order to see this bullish move play out in a further bullish recovery to the upside. And there's a lot of people out there wondering why Ethereum has been so bullish, especially compared to the rest of the markets. And one of the main reasons why this has been the case is due to the fact that the merge is coming up very soon. And unlike all the other times over the past few years where Ethereum developers have essentially hinted at the merge happening in previous years, which has seriously been going on for as long as I've been in crypto, which is around 5 years or so, almost every year that I've been in crypto, I've been hearing that Ethereum developers are close to the Ethereum merge. But this time around, rather than just hearing words, we now have an exact number for the total terminal difficulty, which has now been set in place. And once this total terminal difficulty is reached, that is when the merge happens, when Ethereum's consensus layer moves from proof of work to proof of stake. And based on the current difficulty and current hash rate of Ethereum, because Ethereum is still currently proof of work, this number right here, this total terminal difficulty that has been set, is estimated to take place around the middle of next month, more specifically around September the 15th. And that time estimate as for when that total terminal difficulty will be reached can vary depending on the hash rate for Ethereum, which really depends on how many or how little miners are currently plugged into Ethereum mining Ethereum. And if all things go well, meaning that if the merge takes place with no technical issues, then in roughly around 1 month from now, Ethereum's supply could turn from inflationary to deflationary, which is fundamentally extremely bullish. And if you want me to make a separate video on this channel going into more detail about the Ethereum merge and why it makes Ethereum deflationary, then let me know in the comment section down below, and if I get a lot of suggestions for that, I'll be sure to make it happen. But basically, the main things you need to know about the Ethereum merge is that this is a massive leap in the direction of energy efficiency, and it's also a stepping stone in the direction for Ethereum scalability, which means even though the Ethereum merge itself will not exactly scale Ethereum, meaning that gas fees can still be quite high if there's a lot of usage on the network. But once the merge takes place, we can see other upgrades to Ethereum like sharding, which can improve scalability. And like I said just earlier, this could also make the supply of ETH deflationary, which means it can become more scarce over time as the supply of ETH goes down, which is bullish for the price of Ethereum. But interestingly enough, despite this extremely bullish upgrade to Ethereum's fundamentals set to take place in around a month from now, if you're looking at the Ethereum long positions on the Bitfinex exchange, we are still seeing a relatively low amount of Ethereum in these Ethereum long positions, betting on the price continuing to go to the upside. And this is, of course, after we've seen a massive drop-off in recent weeks in these Ethereum long positions on the Bitfinex exchange, because there's literally been hundreds of millions of dollars exit these Ethereum long positions, which means those hundreds of millions of dollars that have left these long positions are no longer betting on the price of Ethereum going further to the upside. And if you look at the last couple times, we've seen a lot of money flow out of Ethereum long positions. This was happening either just after a very bullish move or during a very bullish move and just before another significant bearish move on the larger timeframes. So the question becomes, why is the big money not currently betting on Ethereum despite a very bullish upgrade to Ethereum's fundamentals set to take place in around a month from now? And there's a few possible answers to that question. One possible answer is if the Ethereum merge does not go to plan, meaning that if somewhere in the Ethereum merge there's a technical difficulty, then obviously something like that happening could cause some big problems for the price of Ethereum, but let's just hope everything goes smoothly. And so that could be one potential reason as to why the big money is being a little bit cautious around Ethereum at the moment. And another possible reason as to why the big money is currently being a little bit more cautious about Ethereum at the moment is due to the fact that in the event of the merge successfully taking place next month, that would essentially unlock all of the Ethereum that is currently locked in the Ethereum 2.0 deposit contract. And right now, as of recording this video, the amount of Ethereum we're looking at here to be unlocked when the merge happens is around 13.3 million Ethereum, so over 25, nearly $26 billion worth of Ethereum. So once again, up until the merge takes place, all of this Ethereum is currently locked. It cannot be sold. But when the Ethereum merge successfully happens, then all of this ETH essentially becomes unlocked, meaning that technically speaking, we could see a lot of ETH flood the markets and be sold. Now, of course, that part of it is speculation. We don't know if any of this ETH will be sold or if a lot of this ETH will be sold. We don't know that. But what we do know is that this will be unlocked. This can be sold once the merge actually happens. And obviously, when you're talking about nearly 13.3 million ETH, which is worth well over 25 billion US dollars, this is clearly not a small amount that is being unlocked. Now, it's important to mention that there is, of course, incentive to keep this ETH staked, because while this ETH is staked, it's essentially earning interest. It's earning staking rewards. And not only that, but if your ETH is staked, once the merge actually happens, you have partial control over the Ethereum network if you become a validator, just like how the miners currently have control over what transactions are approved or denied on the Ethereum network. So based on those incentives, it's more likely than not that a lot of this ETH, even though it becomes unlocked once the merge happens, it's more likely that the majority of these ETH stays staking to reap those rewards. But even if $1 billion or $3 billion or $5 billion worth of this ETH gets sold on the market once it becomes unlocked, of course, that can hit the Ethereum price to the downside. And not only that, but of course, there's always the possibility that this is another buy the rumor, sell the news event, meaning that a lot of people now know about the merge happening next month. And so they're buying up a lot of ETH, getting ready for the merge. But once the merge takes place, it could be a sell the rumor event. So even though it is extremely bullish for Ethereum's fundamentals and very bullish for Ethereum's long-term future, when it actually happens in the short term, it's possible we could see some sort of bearish movement in the price of ETH. But anyway, taking a quick look at the 12-hour Ethereum chart, and right now, as of recording this video, we're still actively forming this rising wedge pattern, which is technically more of a bearish pattern than a bullish pattern, because around 7 times out of 10, this type of pattern breaks to the downside, but around 3 times out of 10, it breaks to the upside. And the levels of support and resistance to watch out for on this chart are around 1800 for support and around 2000 for resistance. And if you're zooming into the shorter term, taking a look at the 4-hour Ethereum chart, obviously over the past one day, we saw a little bit of a cool off after entering into overbought territories. But since then, obviously, we've seen another short-term movement to the upside, which has re-entered the 4-hour Ethereum RSI back into overbought territories. And so due to the price getting a little bit overheated in the the somewhat shorter term, we could be due for a bit of a cool off. But with that being said, we're technically still within this bullish trend. Obviously, if the RSI enters into overbought territories, that doesn't necessarily reverse the bullish trend. It just means that things are getting a little bit overheated in the immediate short term, and we're due to see either a short-term pullback and then resume the trend, or a sideways consolidation and then resume the trend. And if you're looking at the 4-hour Ethereum MACD, as of right now, obviously we're seeing more green within the histogram when compared to Bitcoin on the 4-hour chart. And so technically speaking, this means Ethereum has more bullish momentum in the short term than Bitcoin. But with that being said, even though the histogram has moved back down towards that zero level, I'll be keeping a close eye for a possible bearish cross, because obviously if we end up seeing another short-term bearish cross like back here or back here, that can also be a signal for another short-term cool-off. But like I've been saying, when it comes to the short-term trend for Ethereum, obviously this is more bullish than bearish, which means while Ethereum remains in this bullish trend, we should be expecting more bullish than bearish price action. But we still, of course, need to be cautious about any significant levels of resistance and things like that. And if you want to maximize your profits in crypto, whether or not the price is going down, up, or chopping around sideways, then check out these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.